Hello, everyone. Thank you very much for joining today's webinar. And today's webinar is related about anti-money laundering awareness for financial institution. So first of all, let me start a bit about the financial institutions and anti-money laundering. But first, let's start with the CFE certification. CFE certification today provides auditing, certification, and training services in a wide range of standards such as GDPR, information security, business continuity, quality management, and personal information management systems. And CFE certification itself is certification accredited by UKAS and IAS, also the member of education accreditation institution. And so also allow me to explain myself. I am Nabil Sarkan Zubari. I am been in the banking, payment, and forex industry over 15 years, and I've started my career in a hedge fund, about how to investment on the leverage products, and then I moved my career on the banking and payments related side of business, and then with this one currently. I'm also CEO of a bank called the Kingdom Bank, and with the Kingdom Bank itself, we offer fintech services and fintech banking services. With a branch list, the customers can sign up, can have a bank account in Europe and other global account anywhere. We offer civic payments, and we have payment services, investment products, even crypto related services as well. And as I said, today's topic is about anti-money laundering awareness. So at the end of the day, you will be trying to find, you should be better understand about how money can be laundered and terrorist activities finance, impact of sanctions on the regulated services, how to achieve on the regulated services, and recognize report suspicious activity, management approach to controlling money laundering and terrorist financing risks. So what is money laundering and how is it commonly described? Is mainly is money laundering in a normal, in the publicly, there's a dirty money. If it's cleaned and it's became like a clean money, this is how to clean. It's like a dirty money is washed and became cleaning. So laundering, it is actually the dirty money became cleaned, and if it's injected to the financial market or payment industry or banking industry, and if it became clean, and this is commonly explained of money laundering. And the money laundering is basically, as you will see in the explanation, is a process of changing large amounts of money obtained from crimes, from illegitimate sources, could be drug trafficking, and into legitimate source. And this is all the proceedings of the money should be come from the proceedings of the crime, and crime can be very, like I said, drug trafficking or any the other sources which we'll explain further. And it's a key operation of organized crime and underground economy. So this money shouldn't be registered anywhere else, and it should be not legitimate source. And so to understand better, I should like to explain money laundering stages. The first, the placement. The placement means accumulating money from illegal sources somehow is going to place into the banking environment. And this is going to be, the banking environment means should be bank account transfer, or maybe the bank account to place the money to the bank account is mainly the main process. But there are also some other places, like placement may include using the money to pay off debts, or converting the cash to chips in the casino, falsifying invoices in a legitimate business. And the layering is, as you will understand, transferring the money to hide the origin of the funds. This is the other way. So stage 2 is basically moving up money with the intent and to mix it with the legitimate funds and hide the dirty money illegal origin. So layering, basically mixing. This is I think the best explanation to move forward. Additionally, a money launderer may also conduct layering by buying and reselling assets such as property and high value goods. There should be also layering. And the most important part is integration. Integration, return the money for the money launderer to spend. Integration are the last stage. The money laundering stage is the last one. It is completely, the process, the last stage for completion. And the money is considered clean in the integration process. Therefore, the money returns to the money launderer from seemingly legitimate source. When the money reaches the integration stage, it's almost impossible to distinguish where the money launderer's wealth is legal or illegal. And as a result, money can spend their money without concern. These are the main process. And so as I explained earlier, and as simple as way, dirty value within a placement, within a process, the process, as I explained the previous slide, which is placement, layering, and integration process, and then became clean value. This is the money laundering. And the main objective of also money laundering is conceal true source, mask property ownership, conceal and retain control, the squeeze identity of property, avoid deduction and forfeiture, and enjoy the benefits of crime, which is this is the phrase as we coming from the integration process. And so it's proposed here, the main is to create multiple financial transactions and concealing, which is the other words, hiding the origin source of the ownership of the illegal funds. Because objective of the money laundering is to get the illegal funds back to the individual, or the launderer usually prefer to move funds to stable financial system. That's what we mainly do. Activity may also consider that geographically, according to stage, laundered funds have reached. And if you check the methodology, how they scale, they can use trade, cash, and MSB business, missions, and MSB is basically money service businesses, trade, with cash, of course. MSB, allow me a little bit explain. MSB is a legal term that is used for the financial regulators to describe the business to transmit or convert money. So basically, money transmission business is the money service business, as they know. And the hawala is a kind of the way that they basically in hawala option, the money is not moving anywhere. It's just like two different exchange houses, and one of is buying, other one selling, and without even moving the funds, they just reconcile together and settle the funds. And hawala today is basically an alternative remittance channel that exists outside of traditional banking system. And the other way is that they use is HVD. HVD is high value dealers, and high value dealers under the money regulation. London regulation is any business or solo trader except and makes high value of cash pay than euro more. That is been called high value deal. And of course, one of the ways virtual assets. So that means it's coming from the normal digital money and digital money transferring options, and including assets today is some methods of using money laundering. And of course, there are some structures can take several forms. Most methodology can be categorized into one of a few types, and one of is structuring, bulk cash smuggling, as you can imagine. Bulk cash smuggling is very clear, they understand. Cash intensive business, trade-based laundering, shell companies, and these are the methods of money laundering, bank capture, invoice fraud, casinos. Casinos is basically ground-based casinos, and gambling activities, black salaries, tax amnesties, and transaction laundering. These are the main activities. And so I will, after the information I give it to you, I will be asking you how we can, I have some dirty cash and clean for me. How will you do it? Depends on the explanation that I give it to you. So I would like to think about it. And after the, our webinar, if you have any questions, happy to reply, and we can come back and, think about it again. And so the other most important part is they call nowadays is terrorism financing. And terrorism financing is also basically criminal activity. And this time, this criminal activity comes from directly terrorist activities and organizations. And terrorism financing basically involves 3 stages: raising of funds, self-funding, microloans, and or criminal activity, transferring funds to a terror network, an organization or cell, using the funds, for instance, to purchase weapons, bombs, to make payment to terrorists, insurgents, or fund and expense of terror networks. And how terror financing part of financial crime. This is the main important part. And so terrorist organizations, mainly individual non-terrorist insurgents, require financial support in the end to maintain the the terrorist activity. And the funds are generated through the root of these are the, if you know the roots where they might come from, that will always allow us to understand on the transaction monitoring wise to how the terrorists been financing. So legitimate source, but such as abuse of charities or legitimate businesses like shell firms or maybe cryptocurrency exchanges, through microfinancing, remittance, trade-based laundering, self-financing or donations from terror sympathizers or who are sensitized to the cause, criminal activity like drugs, human trafficking, fraud, cybercrime, market abuse, credit card fraud, forgery, identity theft, and even Ponzi schemes. And some of state sponsorship, abuse, and criminal activity in safe haven and sanctions. And the counter-terrorism financing is also terrorist incidents undergoing a transformation of terror attacks, emerging a common global threat. Crime watchdogs concluded checking the finance was the only way to control global terror. And so this is the main question, because I have explained to you about money laundering and terrorist financing, and now you might ask me, what is the difference between money laundering and terrorist financing? So money laundering is source of the funds will be sort of criminal activity, and I explained the layers of the process. The terrorist financing is largely irrelevant. That means the greater concern is where the money goes and who it supports. The source of terrorist funds can vary greatly, including illegal and legitimate means. And the most important part is measures to mitigate the risk of money laundering and terrorist financing. So there are some type of tips, everyone. So in terms of money laundering, everyone has a view on it. But how to mitigate it is the current situation and biggest deal that all the financial companies that they somehow unwillingly or willingly they want, if they don't want to be participate on it. So make sure that the most important part is the AML program for each financial institution must reflect the business. Make sure that flow makes sense and have a clean technology plans, understand the tools. Be sure that conduct risk-based due diligence. Make sure your training is focused, the reviews, and should financial crime team adequately resourced. So allow me to explain a little bit here. What does that mean? Make sure your AML program reflects your business. That means too many firms rely on external consultants to help put together an almost off-the-shelf AML policy and procedural framework that doesn't reflect literally firms' day-to-day business activities. And in that case, based on the daily activities, based on the application, the client's application that you receive, you should definitely revise your AML program. And the other most important part is the risk assessment should drive the policy, should be in line with the policy. And not only policy, of course, procedures in the meantime. And the procedures need to reflect actual business as usual. And the subsequent control should monitor the entire process is aligned and working. So if a client, for example, is a licensed company and dealing with the client transaction, the first thing we need to understand their flow and why the clients send funds to. I mean, this is the main thing that we need to understand, and also why the payments goes to, and if the website is reflect their businesses. And of course, and currently onboarding is one of the most important part. Yes, we know it because we have now onboarding tools. With the onboarding tools now, currently instantly we scan customers, monitor customers globally, and this onboarding tool is just anymore not only one process, and this became continuity. Every 3 months, but some companies every 6 months they do ongoing onboarding monitoring. And also we have now implemented as well, which is you will see on the latest slides, transaction monitoring tool, also one of the most important process. And these are some example of the cost of terrorist conspiracy. Just give an example on that, but I have more examples. So these are the money laundering at Lebanese bank in 2013. I will just how it works and how it's going to be explained. So if you check here, Lebanese Canadian bank and became one of the major factor of the money laundering process. And as you can see in that regard, what do? They have money coming from basically Africa, but the source of African money is coming from Colombia is a cocaine money, and the Colombia drug money is somehow drained to the Africa, and Africa drugs are sold in Europe and mix it with the legitimate used car, say profits in Africa, and sent to LSB. So the biggest problem here, Africa, this Lebanese Canadian bank, they might receive the funds from Africa, that's absolutely fine. But in terms of source of fund, they should have to check how these guys or how the companies has bought the car sale, right? And how did this fund accumulate? If they would chase to Colombia, if to Africa, how the funds accumulated matter, and they wouldn't be dealing with this issue. So, and then they would stop. This is one of the examples that I might give it to you. Also, actually, the compliance AML problem has been currently still in 2021. A lot of banks and also the money MSP companies or payment companies has received a lot of fines, and some of them get jailed. And for the last year. So I will just give you some example. But before of this, I would just explain to you high risk jurisdictions and so on, and then I will get back to you if you have any other further questions. So this is one of the things that we need to be discussed about. If you go back to the main slide that we're talking about, some countries are in the high risk jurisdictions. Some of them are low risk, and the main reason is mainly the countries they risk approach about the money and the explaining the source. For example, in the UK currently, we have a company house, and with the company house you can see the shareholder detail, director detail, and the bank itself are so strong to check how the fund accumulated matters, source of funds, and everything. And if a country itself make these checks already and publicly share all this information about the company details, that drops the jurisdiction risk on the country wise. But in the meantime, if you don't share with the shareholder directed information, at least it's not easy to publicly access on it, and that makes more difficult. Or even if a company receives funds and if the banks doesn't ask how the funds accumulated and without just asking, and this is also increasing the company and also country risk level. And as you can see, these are some of it. And as you may nice surprise, these are some of it is in here. So the other most important the important thing is customer due diligence and monitoring. So customer due diligence are basically identification and verification of customer. And for the companies, the beneficial ownership identification and verification. And understanding nature of business and customer relationship. And we should also check if it's in line, the activity, if it's in line with the business description they have declared. And of course, the other thing is, which is I mentioned earlier, ongoing monitoring for reporting and suspicious transaction on risk basis. There's other important thing. So not only the onboarding processes are important nowadays, and we keep also monitoring this as an ongoing process, but we should also always monitor the transaction as well. If it's in line with the business, if there's any suspicious activity, if there's any payment and is larger than as usual, or if it's not related with their business. And this is now that comes to red flags, and red flags is basically detect money laundering in the financial sector. So the red flag that we call it mainly if there's any transfer is not in line with the business. Let's say, let me give a clear example. A company has averagely 100,000 euro monthly volume, and somehow they have volume is equal to 300,000 euro. And this is mainly should be a red flag. Or they receive money as usual same way, but this time they have received from some other company, even if it's not related to the business. So this is a sort of thing that the financial crime team has to be literally aware of. And if there is any kind of issue situation, they should put this transaction red flag, and even they need to create suspicious activity report in terms of informing the team and also regulator. So this is the most important that I want to explain, because I explained to you 2021, one of those year that the banks and the money institutions has been get a huge fine. So one of the examples is from NatWest. NatWest has received £250 million AML fine, and if you check it, the bank itself, NatWest, is a huge high street bank in the UK, as you may know. And between November 2012 and June 2016, NatWest failed adequately monitor the activity of commercial customer, which is Fowler Oilfield, and it was a famous jeweler firm in Bradford, and assumed it will not handle cash from Fowler Oilfield firm when it took the account. But however, around 365 million was placed with the bank throughout the customer relationship, with around 260 million in cash. And this happened in 4 years. Some of the bank's workers, employees in charge of handling this cash deposits, even reported the suspicious activity to the bank's money laundering investigations, but they took no action. The reported red flags included depositing large amounts of Scottish banknotes around England, suspicious behavior when individuals were depositing cash at NatWest branches, and this deposit notes was a kind of strong master order as well. And so there's always, these employees, let's say first line of defense has informed the AML investigator, and they couldn't take an action. So we should be really careful. And after the 4 years later, actually this has happened in a 4 years period, but 5 years later they got fined. So You should think about it as a long-term process. You shouldn't think like in a short term on it. Okay, this is nothing happened for the first time. If you see any suspicious activity, whatever you think it is, you should share with your AML and the investigations on it. And key takeaways is the most important part here. We should be aware of. Conduct initial onboarding customer diligence. Using a risk-based approach is the most important part. This and also ongoing onboarding is one of the most important part. This is good because you should keep checking your customers if their business description or business plan has changed, or any shareholder, UBO, or director has changed. This is a good way to do it. And especially for the high-risk customers, especially jewelry, this gold business always considered as a high risk because somehow they have a cash deposit or cash-related businesses considered as a high risk. And we need to get more particular attention on it, and reporting any of suspicious activity is the most important part, and avoid the tipping off anyone who has been reported for money laundering and terrorist financing. I will explain later on what is terrorist financing, but these are the main stage. Another example is well-known bank HSBC, global bank, and they got fined 64 million AML fine, and this time is they have somehow they don't have inadequate monitoring terrorist scenarios and money laundering until 2040, and the bank failed adequately assess of the risk of new scenarios from 2016, and the bank has admitted and their failures, and then they agreed to settle, which is 91 million pounds. This is what they agreed on. And actually, it was also, there was a Netflix TV series called Dirty Money. It was also became a subject, and they explained how they didn't have a system that they have a monitoring about the cash transactions, and they don't have a proper onboarding tools, and also first line of the defense of the people, they weren't really well trained, and that became also the issue. Which is, if you see that transaction monitoring systems and system, they weren't in place and should be ongoing, and lack of consideration in this breach of AML process. This is also kind of is related for staff, because if they aren't really well trained and they don't know what to do, and they should be failure, and we should have adequate risk measurements to know what to do. I always use that, the AML and compliance is tick box exercise. If the team, if they have policies and procedures in place and everyone knows what to do, all the things they tick the box if it's within our business and risk matrix, risk parameters, and this is going to be done properly. Another one, MT Global, I would like to give an example. MT Global Limited and got biggest ever HRMC fine. AML breaches between July 2020 and December 2019. And what they do is fundamental customer due diligence measures, risk assessments and record keeping, controls, procedures and procedures. And they didn't do them all. And this penalty is 3 times as high as the previous record of penalty, 7.8 million handed out by HIMC last year. And according to the Nick Sharp, Deputy Director of Economic Crime Fraud Investigation Service, we are here to help the business to protect themselves from those who would prey on their services. That includes taking action against the minority who failed to meet the legal obligation under the regulations, as the record find clearly shows. So key takeaways here, there are not sufficient measurements in place. Ongoing customer due diligence is one of the most important thing. You might onboard a customer today, and then 1 year later, then they might change director shareholder. Even they have to change, they change their business plan, and we should be aware of this is why it's so important. And if you don't check it, you will be fined like MT Global 23 million. And also the other thing is you should always watch closely the government regulation and in line with the policies as well. And today's AML review and awareness, just shortly explain. And of course, this is just wanted to give you brief information within the time that given today. But of course, if you want to know more information, if you want to be AML officer or financial crime investigator, The CFA certificate has a very advanced program, and you will become one of the professional if you are planning to be a career in the anti-money laundering officer or MLRO, and also the financial crime investigator. I would kindly suggest you to sign up and get more benefits, and you will have also the certificates as well about this training. Thank you very much. If you have any other questions, I'm here to reply. Otherwise, enjoy the rest of the day, and I hope this program is successful for you. At least give you brief information about anti-money laundering and terrorism financing. Thank you. So if you have any questions, please raise your hands. Otherwise, you need to end the program. Okay, Mr. Topchi, how may I help you, sir? I think you're in mute.
Okay, can you hear me?
Yes, we can hear you, sir.
Yes, so for the e-money platforms or like financial institutions, how often is a good recommendation for like checking watch list for your customers? Like, is it monthly, weekly, or yearly? What is your suggestion?
In terms of ongoing onboarding process,
Yes.
the 3 months have been normally advised. For every 3 months, especially for corporate customers, as a part of ongoing monitoring, you ask the customers to refresh their documents. In fact, even all the legal documents are legally, if they have within 3 months in period, they normally accept the documents if it's within 3 months. So I would kindly suggest you, for the EMIs, for the companies who are dealing with corporate customers, individual customers, to refresh their KYCs within 3 months will be the good time of period. So, refreshing their documents.
So this is like the client side of the interaction. So my question is a bit like, for example, like you onboarded your customer, you get their documents and you verify their identity and their address with 2+2 verification, and then everything is good, and then we are planning to check the watch list like every month if something changed in the databases. Okay,
that is correct.
So is monthly is good for this kind of checks, or it should be more regular, like weekly or daily, because like if they have a financial crime or their status changed in one of the databases we check in the watch list.
I understand what you mean, sir. So in terms of if they don't have a transaction, monthly is a good process. But if you have already transaction monitoring in tools place, I would strongly suggest, recommend, and this one will be done automatically anyway.
Okay.
Every transactions, so without doing any like a daily or weekly. So let me give an example. If the client, you have open account with all the past KYC, done everything, but if the client has no transaction, 1 month is a good period. But if the client's actively making it, money transfer, transaction payments, and so on, and I would suggest you to have a transaction monitoring tool in place, and this will instantly check the client situation every time.
Okay,
which is a good process.
So
you will be in the safe side.
Yeah, that's perfectly answers my question. Thank you very much. And also the other suggestion, it is also very good suggestion. Thank you very much for that one.
That's all right, sir.
renewing their documents every 3 months, maybe a little bit like not user friendly, but we'll try to make it as easy
Yeah.
as possible for our customers. Okay, thank you very much.
You're welcome, sir. Some companies do 3 months and 6 months, but of course depends on the also regulator.
Mhm.
And I'm sure the regulator gives you kind of a guideline on it.
Mhm.
And the main companies, EMIs or e-money businesses or being a payment institution, they do between 3 months or 6 months.
Mhm.
3 months. So you in fact that every company documents, even today, right? If you open an account, even for yourself, so what the banks does or the payment institution does, they ask for the last 3 months document.
Mhm. Yeah,
And this should give you a hint on it, like you should also renew every 3 months.
yeah, that makes sense. Thank you very
All
much.
right, sir. That's all right, sir. Thank you very much for the question. Anyone else? Any questions? If you have any question, you can just raise your hand, and this is it. Then I will, you can have a question. Okay, thank you very much, everyone. Thank you very much for your valuable time you joined today. I hope you have at least a brief information about money laundering and terrorist financing and financial crime as well. And I hope we will see you soon again with the CFA program and training programs. Enjoy the rest of the day. Have a great day ahead. Thank you.